till news event. 20 seconds till news event.
10, 9, 8, 7.
Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream is for educational purposes only. It is about helping you build a business and a career in trading. This is not a trade calling room. This is about integrating Bookmap order flow tools with auction market theory. In other words, how does the market work? Why does it tend to do some of the things it does? And how you might integrate a market understanding of these behaviors into your current or developing trade plan. The tool we use to see the inside the market behavior is called the volume profile. It is very simple. It is about price and volume. Most of us look at price and base what we do on price or lagging backwards looking indicators that track price in some derivative fashion. However, being to stay as close to the market behavior as possible and developing insight into these potential behaviors and market mechanics might help you get better aligned in as close to real time as possible. And to do that, we operate in multiple time frames or fractals, and that is basically top down, that's higher time frame down, and then using microstructure or fractals to participate and engage at times in the market using a vetted trade plan. Trade plan is really about understanding statistics and understanding that trading is a mathematical game. And it is about identifying an edge or a probabilistic outcome that gives you an edge over a random outcome. And this is manifested just like it is in Las Vegas, where you have gamblers sitting on one side of the table, and they are random in how they behave, in the sense, do they fold, do they hold, do they draw cards, how does that impact everybody? And then we have the dealer on the other side, which also has a random outcome. However, that random outcome has a statistical edge. And over a large sample size of interactions between gamblers and the house has the edge, which is why, if you go to Las Vegas, they give you the free buffet coupon, buy you cocktails, maybe have the limo pick you up at the airport. Please bring the cash, because over time that edge shows up. So as traders, if we consider trading a business just like the house does in Las Vegas, it's not about one hand, one trade. They see gamblers as random inputs. They understand they have the edge and it will trickle to the bottom line. If a gambler walks out with a winning or a trader takes a stop, it becomes overhead, cost of production, not an approval whether you are smart or not, or you can, quote, predict. That has nothing to do with the business of trading, and the purpose of this stream is to help you understand the reality of the trading business and how you might create a plan to operate in a random environment and change your viewpoint of what is really happening. We bring beliefs to the trading business and attempt to wrap trading around these beliefs. They work fine in the outside world, but unless you've run a casino and understand the business of risk and risk management and probabilities, you've never been in this business, you don't understand it. The goal of this stream is to help you understand the trading business. I hope you find that useful. Let's take care of business. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. Trade calling, in my opinion, does nothing to put you in a position to create a career in trading. It creates a dependency. And now that's fine if that's your objective. And then you can, of course, do whatever fits, your objectives. However, the objective of this stream is to have a consistent application of a process. It is the consistency of how you operate in trading, just like how the casino operates in the specific games. That consistency is what allows those metrics to come to the bottom line. So I do the same thing all the time. It is repetitive because the business of trading is a repetitive process. In my opinion and experience, you must anchor your process. The market is not anchored. It is random. So one of these pieces needs to be anchored. If you can't control the market, you can control your behavior. And just like Vegas, just like the casino, they don't change the game. They know their edge. They know their statistics. They don't change the game. They let the game play, and they depend on metrics. That is why in this stream, I do the same process. And that is how, in my opinion, you build the business. You don't keep changing your business. The market is the random piece. You need the consistent piece, because randomness times randomness equals chaos. So your trade plan needs to be the consistent piece. Your execution needs to be the consistent piece. Your setups need to be the consistent piece. And you measure them. And as you measure, you're going to find things you think work are really just random and are guaranteed losers. Other things that you may have right in front of you that don't fit your mental state of expectation might actually be the winning trades or setups. That's where you need to sort it out, and that's the work of trading. So let's go take a look. And as you guys know, I start at the beginning, and let's try to do this without creating damage. And again, I'm on a laptop, and I'm in Costa Rica on a shoe can in a string, so please forgive me. And if I drop out, I will come back in, hopefully, at some point. Okay, this is our higher time frame, and remember, this is top down, bottom up. Top down means higher time frame. This is a consolidation. And I reviewed this yesterday, and if you guys remember yesterday in the stream, I mentioned our target was to come down here. So we were, and this is before yesterday's open, which gave us this. So let's take a look at what happened. This is a consolidation, so too low, too high. And remember, auction, if you will, the market is an auction. What it is the participants are trying to figure out what's too low, what's too high. And what they'll do is the price will go wherever it needs to go to attract the buyers. The price will then go wherever it needs to go, where the buyers are going to say, I'm not paying this. And then the sellers lower the price to engage the buyers. And then the buyers perceive, if this is retail, and that's what this is, that this might be too low relative to retail, and we tend to rotate around it. That's a consolidation, and you guys know that if you've been trading. So here, if you guys remember this day here, this price, which is around, let's just say 70, 39.69, half 39.70, retail in here. The morning of this trade, this was the high of the day, and we were on the short side. Okay, and I want to take you back to it because this is the low of the previous day, and what's sitting here? Sell stops and sell stops. And I'm taking you back to where we were previously because it's really important to understand. And when we were on the short side, we said, this is vulnerable. And that's when I call it the warning Will Robinson moment. And if you guys remember, there was a TV show, maybe you don't, but in the States, called Lost in Space. And there was a robot there that would say, warning Will Robinson. And Will was this young boy, and the robot would kind of warn him if something is happening. Well, this one, in the Trader Lab, we talk about narrative. In other words, narrating the process. And it goes something like this. And by the way, grab a pen and paper. And I repeat these things because if you can integrate some of these behaviors into your trading, it may help you stay in alignment. Because when the market is doing its thing, it's reasonable to anticipate possible behavior, right? And then if it doesn't happen, don't we want to be aware of it? Because if something doesn't happen, is actually more important than what is happening. So if the stops are sitting here, and the stops are sitting under here, and the market is coming down and it doesn't do something, that's your warning Will Robinson. It goes like this. So if this is too high, then what? Then that. Then down here. If we don't take it out, so if this, bing, then that. If not, then what? The then what is the warning Will Robinson moment. Now right here, at this level, right around here, and it was just a hair below, Fed Chairman Powell came out and said maybe we won't be raising interest rates as quickly as anticipated. That is input that disrupts the auction. And you remember we talk about the auction and then it's disrupted. Well, we ended up with a long in here, and then, this is unknown. I'd like to tell you we know, but I'm going to tell you the reality is nobody knows. I mean, that's the randomness of the market. But this set up a situation that, and we spoke about this, the auction is a consolidation, right? It's two-sided. What's something worth? If the market races through an area, it's not auctioned. It's a bullet train. It's like, what's this worth? What does it mean? I don't know. Let's get out of here. All these shorts in here cover, and there's all these buy stops now above here. That becomes fuel. And that's your breakout, right? And that's what breakouts are. A breakout, and especially as the time frame goes higher, has more energy because all the participants in this consolidation, one side is going to get pounded, and it was these guys. Thanks for playing. So that's why you get these outsized moves. So now we come up here. Let me just show you this. And then we consolidate up here. This is balance, so two-sided trade, right? This becomes our retail price up in here. So this is where the highest volume is at the time, up in here. What do? Open lower, come back up, check this. Too low, retail. But we can't hold on to it. And one of the reasons is down here is not auctioned. So yesterday, we fail and we start coming down into this poorly auctioned area. That indicates potentially too high. Now, where did we leave behind? This. So that sets up this as an area to check. And then where Jerome Powell actually made his announcement was around 56, so 39.56. Is everybody with me? By the way, if you have questions, please post them. There's about a 15-second delay in YouTube. and make sure you're on 1080p, and I will do my best to answer them. And now what I have to do is get rid of this chart and not blow things up. So let's try that. And now I'm going to start from the open, and we'll go from there, and you'll see how this develops, hopefully. Just give me a moment now. I'm on a laptop, guys, and I have to tell you, being on a laptop does present certain challenges, okay? Okay, we doing all right with the Discord and YouTube? I'm just trying to keep things sorted out here, not blowing things up, just asking. Yeah, hi, Paul. Thank you. All right. And by the way, if you're in YouTube, a thumb up if you find something useful out of this. I'm going into this in detail because this is what I do. Remember, this is not a trade calling room. This is about helping you develop a trade plan so you could do this independently. Because in the end, isn't this about being an independent trader? That's why trade calling, in my opinion, if that's where you're going, that's also like just give somebody your dollars and let them trade. Give them a percentage of the profit. That's what trading advisors do. Otherwise, you're not learning, in my opinion. Doesn't mean you can't get value out of it. It just means where you're going with that. So let's watch. So RTH open is 8:30 Central Time, my time. This is the open. Now, there's a couple things you want to be aware of. Let's talk sequentially. Yesterday turned into a trend configuration down. That means we were falling out of that higher time frame and potentially going to fill in that poorly auctioned area that I just shared with you. Okay, so that's one thing. And when you fall out of an area and the market now expands its range and it becomes one-sided, that is a trend configuration. And when in the Trader Lab, we talk about something really primary to trading, and that's called context. The context changes interday from directional to rotational and back to directional rotational. And that is the fractal nature of the market. So we have yesterday, and then we have the ETH. What is the ETH? It's the next auction. So yesterday we suggested that there would be downside potential, continuation, because the volume point of control yesterday, which is the retail price, had closed towards the low end, I believe, of the auction of yesterday's trade. That suggests if the retail price, and that's what's represented by high volume, or the volume point of control, which is this yellow line, is moving lower, that is suggesting acceptance potentially lower. And it is all contextual. So that suggests lower. Then we have the ETH with a tight range and the overnight volume point of control. And I'm going to try to open this up. I just want to show you how you're putting pieces together potentially. And again, nobody knows. This is the overnight volume point of control. So for the ETH, you have a high and a low, and it's called the overnight high, overnight low, and the potential for one of them to get taken out is over 90%. And you need to vet any statistics you hear from anybody for yourself, but I'm just going to say over 90. Also, the first hour high and low, which is called the initial balance, high, low, and please write these down. Even if you've heard them before, you should continually write them down and make them potentially part of your trade plan if you find some validity and some way to use that information. Also 90% probability, first hour high or low will get taken out. This is the overnight volume point of control. And let's remember, what is the volume point of control? It's retail. In other words, highest volume. And the way to think of this is kind of like when you go shopping. And I don't know why I think of tuna, but tuna at $1 a can, if that's where you're willing to buy the tuna and the seller is of tuna manufacturer, let's say, seller is willing to sell you tuna for $1, that becomes the retail price. So all the shoppers go into the store, pay $1, seller sells it at $1, and that's high volume. That is your retail price, isn't it? So in the overnight ETH session, this is where the highest volume was, so it's your retail price. Now, in trading, there's no precision. I always think of it as horseshoes and hand grenades, but it's a reference point of what was the fair price in the most recent auction. Write that down. So we now are back to the open. You're going, really? Right? So the open is 8:30 Central. So now we're back. I have to put these pieces together or else it's not going to make sense. And even then it might not make sense, but we want to understand how we can use participant behavior. That is, to me, the clue or the key of understanding the potential. And like everything in trading, it's maybe, right? But if you can understand what the market participants are saying, maybe that gives you something that you can build upon. Understanding and accepting it's all random on top of that. So this is retail in the last auction. This is the open. This is the previous settlement. So we open lower. What might we get? If you were short from yesterday, and we always discuss this as in a trade lab, there's some possibilities. Well, first of all, it opens lower, it keeps going. Okay. I mean, it can do anything. But what might it do? Let's reason this out. Write this down. Might, and you always have to think from both sides. So if the market's short from yesterday, we know we have a poorly auctioned area below. We know we're rejecting that higher value of that in the intermediate time frame, and we're leaving it, which is suggesting too high, and we have the potential to go back where we left below around what was it, 3670, or I can't remember exactly the number because I can't see all these things on my chart since I only have a laptop. Try trading off a laptop with two monitors, by the way. I do trade off it, by the way, but with the streams running in the chats, I just cover everything up. So this is retail in the overnight session. So now we're back to the open. Watch. Try to watch anyway. So if everybody's short, remember, what's the potential? Profit taking. What does that give you? It's called, write this down, responsive buying. Now, nobody knows this is going to happen. So don't think there's clairvoyance. What there is maybe, write that down. Maybe we'll get the buyers who are short covering. They are, and that's why they're called responsive buyers. They're not getting long necessarily. I mean, some might be, but what would you do if you came in short and you had a open that was lower? Might you cover? You might cover some if you're a swing trader, right? That's what this is. So now this up here was the retail price. Let's put it together. Now we're going to put pieces together and I'm going to move along. I want you to see market mechanics and context. These are fractals. They are built upon each other. Higher time frame in the most recent auctions, and then the developing time frame. So market opens, dips lower, comes up, check, price check in the ETH aisle. Is this fair or too high? If the trend is down, this, now let me tell you what this would be. And I have no long because I'm looking for short context. But if you were a shorter term trader, this might be a long back to here. Not me, not my thing, me short. So I'm looking for shorts. This is my first area to look for behavior. And again, I have no clue. Now I'm looking, watch. I'm looking. Now this looks like a potential short here. We check above the overnight and then we reject it. Okay, now what? Watch. This here, now this may, if this is not part of your trade plan, you got nothing to do. You just sit and you're a tourist. We do a lot of touring in the Trader Lab, you know. It's like sightseeing at Disney World. High volume, break. Now these are not trade recommendations, so this is not even a trade that might be part of your trade plan. Let's watch it. By the way, you guys getting a clicking noise coming through? I just need to know if you're getting noise. Let me know if you're getting noise right now. No clicking? Okay, good. All right, good. No noise. Just me. Okay. It's from this up here. So, potential short. Not even something I would take. Here's what I do. I'm looking to see if I want to get short. I'm not necessarily going to get involved here. I'm going to use it as an indication that this price might be too high. It gives me more confidence now to look for the shorts. I'm certainly not going to be on a long. For me, I'm going to be looking for shorts. The volume point of control shifts higher. Notice how we came back and checked this. Under different contexts, this would be a long, but I already got this. So let me just take you back. If we hadn't checked this and the context was different, this is a setup for a long to here. But we already went there and the context is short. So you see, no trade. Now, this, and I wrote this down for you guys. I want to share this with you. This is something I don't talk about, but it's time to talk. Okay? We call this a variable high volume node. And let me explain what it is. Market opens, chop, chop, chop. Here's your first volume. This is a consolidation. Too high, too low, right? Break low. Too low. Break high. That says this is too low at the moment. The volume point of control is here. This is where the most volume is. We come up here, overnight volume point of control, break, too high. Pull back and check the volume, too high. Return here. Okay, back here, too high. All this is suggesting to me too high, except this moves up. Now, watch. This is too low. This is too high. This is too high. This is auction. Now, if you can't interpret this, don't worry about it. When it's not clear, your job is not to get involved. Your job is to attempt to narrate it and wait for a vetted setup that you can recognize. And it's a building process. Now, I'm going to show you a short right here. If this is too low, this is too high, I have to turn this thing off. It's just showing a lot of selling going on here. And we break down, we break below what was too low, we come back and check it, it is a potential short. Or wherever. Now, you're going to ask me why? Too low, too high. Overnight volume point of control, which is the same as this. This is developing, it's too high. Come back. Here, are we going to go up? No, we're not doing it. We break the other way. If now this becomes your potential resistance. It can come back here. It can come back to the VWAP. It can come back to the mid. But the volume supersedes the lines on the chart for me, especially because of what happened above. Now it's a short and wherever. Now here, and this is about trade management, look at this liquidity sitting in the book. Watch. Now, this is a different part of the plan. How do you manage the trade? Well, you could be out here or you could just be staying in a higher time frame. Let me show you the next trade. And then we'll get into real time, wherever that might be. This is resting. This comes into the book. This comes into the book. This is like pressure, okay? And it skews the book. Now, I don't make a trading decision off this. What I do is I'm using the structure of the participant behavior as a primary chassis. But when I see this, it helps me look at it in the sense of, well, we may rotate off here. Then it's a matter of your trade plan, right? What do you do about this? That's another piece. And this is something that's a function of the fractals. So let's watch what happens here. So that trade would be done if that's part of your plan. Now let's watch. We come up, high volume is here. Now I'm looking again for another short. Right here. This is called VPOC migration. Notice the book. Notice this. Chop, chop. Now right here, it is saying that where the yellow line was, or the VPOC above was, is too high. So now, what does that say? Too high. This now becomes retail. If it's retail, then we have the potential to come down and check this liquidity and potentially go lower. Watch. This is Trader Lab behavior. This is, what we do in the Trader Lab. This gets marked, becomes a variable high volume node, right? Is everybody tracking? Just let me know you're with me. I'm showing you a sequence because these are observations or setups that we vet and trade, and everybody's different as far as the time frame, right? Yeah, good morning, everybody. So let's watch. Oh, another short. Watch. VPOC migration. Now this is a target. If you guys remember 3970 from the higher time frame chart, this is a target area. Now when I get here, I'm looking at it and I'm going, okay, but this just came down saying retail area to observe. Now we have something else, right? Remember I mentioned the IB, the first hour high or low has over 90% probability, and I know you guys wrote that down. Well, this is a primary target, but I have a statistic with over 90% probability, so now I want to hold. And I have another price point below. This is where Powell came in and made his announcement, which scrambled the auction. We had the bullet train, remember? Well, this is where it was. So if the auction was disrupted, the potential exists for it to come back and check, after, and continue where it was before or whatever. Over 90% probability. This is my next target. So now, hanging out. Let's look. Now, short from here, I have no problem with that. What about you? Now we're going to get into real time. Remember, first hour low, and it sets at 9:30, which is right here. And there's 9:30, okay? Now this thing is going down, right? So I don't think we'd have to worry about the initial balance high getting taken out. We're below the higher time frame volume point of control. This is the intraday developing volume point of control. This is all fractal. You see, this is the thing, the beauty of auction market theory. What happens in here, where this little microstructure is, right in here, is the same as what's happening here, is the same as what's happening there, and the same as what is ultimately happening here. So let's watch. So, chop, chop, rotation, and this is called mean reversion. Now, this is probably going to make you a little nutty, but we have context inside of context. So if this is retail, there's a couple possibilities. We just break down, come up, continue, okay, possible. So if you got involved here, you would get a scale if you're following what we do in the Trader Lab. Let me show it to you right here. Short into liquidity, or if you didn't get a scale, you would take a stop. Me, I don't throw myself under the bus for that. But this is the next trade. This is called mean reversion. And it's a very tight trade here. If it doesn't fit your plan, you have nothing to do. Watch. Now, mean reversion, so here's what we have. Down context, I think we agree. We're looking, if it goes into balance, this is called balance. And all it is, it's changed from a directional move in the shorter time frame to a rotational move. And that means try to get to an outside edge for a return to the mean. That's what makes it mean. And we laugh in the Trader Lab, yeah, it's mean, because you don't know where the outside edge is. So you can get, you can take some shots, take some hits. And it's all part of trade management, risk management, cost of production. Remember the casino, right? And then remember, we have a statistic at 9:30 over a 90% probability, right? You have to vet the statistic for yourself. So why wouldn't it make sense that I would be trying to get an outside edge to scale for this and then hold, right? And I have that 56 down below. Remember? This is how you put pieces together. So this would be the target area. So watch. And this is all what we talk about in the Trader Lab, and it's all out here before the fact. So high volume, break, pullback, potential short, and you're going for the IB, comes in at 930. So this low, and then here. So let's watch it. What does it do? Don't remember actually. Oh, there you go. Okay, there's your target. That trade would be done. Does everybody see it? Does it make sense why we talk about context? If the context is down, but in the fractals, it can change behavior and go into what's called mean reversion. This is the same process we use in the Trader Lab when it's just two-sided trade, you know, up, down, up, down. Well, if in a downtrend configuration, it's one side of that context, which is the outside in. Is this logical? Does it make sense? Are you guys tracking? So watch. VPOC migration, saying too high. We mark this. It becomes a VHVN, right? Variable high volume node. I am consistent. It's methodical and random. Remember, the whole thing is maybe. So this was too high. This is a reference point if we come back to it. Currently, this is retail. So chop, 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 break low. Let's just see what it does. I don't know what it's doing. You guys tracking? Have you seen this before? Yes, no, maybe? Does this make sense? This is basically if this, then that. If not, then what? If this is too high and we shift low and you see chop chop consolidation, break low, this is microstructure and compounded with intraday developing structure. So this is the same behavior as all this, except this is the daily time frame, developing daily time frame. That's your volume point of control, the highest volume at the moment in the whole enchilada. This was where the highest volume was, but when the volume and the price are moving together, it is suggesting this is too high. Now, the market can do anything. Remember, it can come back and check this and go, yeah, maybe down here's too low. Let's go back and check what's too high. And it can ping pong or none of the above. So let's watch the behavior. So what's the behavior? Look, chop, 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 micro structure. Let me open it up and show it to you. So right here, and all I'm looking at is the volume now that's on the chart. This is the chart volume profile. And this is how I use it. And Bookmap is really cool for this because now I'm looking at the microstructure here. This profile is tracking all the volume for the day, and the volume point of control is generated from this. So that's this, and previously was this. In here is that. Same process, fractal. So when I see this, chop, 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 it's a consolidation, buyer and seller, buyer and seller. Tuna fish at $1 in the convenience store down the street. It's limited, but the same process happens. You know, 10 o'clock Saturday night, pint of ice cream. There's no line at the little neighborhood store. In fact, they charge a little too much, but for the convenience I pay. But because there's less participants, it takes up, there's less volatility, but it's an auction and there's a retail price. So that's what that is. And then this is for the whole day so far. So too high, break, and I'm looking for a pullback. Too high, Too high. See the alignment with the multiple time frames. Short. Are you guys tracking? Watch. Now, this might not be your thing. Price check in aisle 3. Right here. You see it? Price check. Do you see something over and over and over and over? And I don't mean to say over and over, but I'm trying to make a subtle point. So, too high, break, too high, break, shift down. Is that really too high? Break. You see? Microstructure, whatever, but we could come back and check, remember? Is that really too high? Yeah, I'm not paying that. I'm out of here. Tracking? Now we're in real time. Marcellulos, welcome to the Trader Lab. Review this stream. I already went over that at the beginning of this, and I don't want to repeat. I want now stay in real time. I got to get this thing on. This is making me nuts. Hold on a second. Wow. This is a new tool that I don't think it's released yet. It's called Market Pulse. And it basically, right now it's tracking the differential in the volume between the buyers and the sellers. I don't think it's available yet. But a lot of these things we vet, and by vet I mean I should say we work on with its beta. So I don't think it's out there. Anyway, let's get back to real time. So let's observe the behavior. Too high, price check, and we also have a setup in the Trader Lab. Let me explain it to you. It's called the IB continuation trade. Remember, the IB stat is set at 930, 90% probability to break it. We break it, we come back inside, pick stops right here. This shifts down, confluence, and it's after a stop pick, short, pull back, stop pick, short, pull back, stop pick, here, shorts. These are all shorts in the Trader Lab. Pull back, short, continuation, helmet, trade management. Everybody tracking, and anybody in the Trader Lab not familiar with all of this? Any questions? How you guys doing in YouTube? You pass out yet? Any questions on this? This is a trading process, and it's repetitive because to me, it's not about us changing what we do. It's about us having a plan and waiting for our trade. And in the Trader Lab, it's not about grabbing all the wiggles, and the rotations, which is a FOMO. Is really, I want it, how do I get it, and I think when we start trading, that's kind of where our orientation is, because we think that's what trading is. In my opinion, that's not trading. Trading is waiting for vetted setups, just like the casino plays its game, it doesn't change its game. It's not, they just have their expectancy and they trade their expectancy. Stops are part of the cost of production in the business, but these are setups, right? And if you come to Trader Lab, and I invite you, if you haven't come to Trader Lab, to visit, if you're interested in the business of trading, not trade calling, I'm allergic to trade calling because it creates dependency and not independence. I'm sitting in Costa Rica at the moment with a laptop and a second screen. I am, quote, working from here. I am trading from here. It creates independence. Getting to this point took, I will suggest, a little time. I started trading in 1980. And I will tell you that I've gone down so many rabbit holes that I don't remember them. And I think that's good because I'd probably be continually depressed about it because I had beliefs and the randomness caused me to think something actually was working. And then I would create constructs to try to keep it working. Multiple time frames, backwards looking indicators. We all kind of go through that. But what I found was I did not have a consistent process because I was mixing inputs, and that created randomness on my part. So I was random, the market's random. What do you get out of that? To me, chaos. So I really had to gradually, and it was a gradual process, because early on when I started, we didn't have indicators, and then indicators, and you guys know about me. I worked, shared an office with George Lane. He created stochastics. I actually worked early on with the primer chassis that TradeStation was built on. I actually collaborated early on with Ralph and Bill Cruz out of Miami, who actually created TradeStation. But before they created TradeStation, they had an end of day process. So I started writing code, so system design. I was a swing trader. I'm just saying, as a trend follower. And of course, I didn't sleep well. I had a quote machine next to the bed. I'm just going to say. It was not very popular with the significant other, but anyway, so things have changed, right? We didn't have a Globex. We didn't have anything. We had nada. So that's my background, So I've gone through a lot of, and I've gone through the same thing you guys have. I'm no different. It took me longer because we had no access to information. There was no internet. You bought a book or went to a seminar. So I'm just sharing a little background about me if you don't know. And very painful. And here's the other part. Having segments of time where everything was rocking and rolling. But I didn't realize that my inputs were random. And I didn't understand the business of trading. Nobody ever told me. Everybody was a floor trader. And what I did was in technical analysis, kind of what I was doing at the time, classical bar charting, all that was looked down upon as voodoo. I mean, it was really looked down upon. It was like a joke. Now, you guys might not think it was a joke, but it was a joke back. All right. Am I back? What happened here? Am I back here, guys? Things kind of went south of the border. Yeah, okay. Lovely. See that? A pigeon landed on the cable. Must have been. Yeah. Okay, good. Thanks. Yeah. All right, let me see if I can restart a few things. We had a little nasty going on here. Let's see if I can get things going. Hold on, guys. Just trying to repair some minor events here. Okay, and we all back, sort of? Okay, are we streaming? Yeah, okay, and YouTube, we all right? Okay, good. All right, sorry about that, guy. Costa Rica. Actually, I'm glad that we have any internet, to tell you the truth. It's not the internet, it's the power. Let's see if I can get things working again over here. Okay. So, back we are. This is the next target down here. This is a low volume area. This is still a short that we were talking about. And you guys, I was talking a little bit about myself and my experience in going down the dead ends in the rabbit holes of inconsistency where things appeared to be useful, but it was always a curve fit. And I don't know if you heard about my mention about Omega Research, Ralph and Bill Cruz, that I had the chassis that TradeStation was built on. I actually worked with that. So I've been around a while, 43 years of trading. And I'm not going to, and here's the other part of this. There's not one way to trade, but I would suggest you strip it down to its minimum components so you can create consistency. Trading complexity obscures what's right in front of you. And my belief was that if it was more complex, I would kind of find the needle in the haystack. In other words, I came in with a belief that if I had more, I could get more certainty. But it did the opposite. If you're doing that and you're kind of waking up and trading Groundhog Day, it would be the same thing for you. If you're finding that's what happens to you, you might want to consider reevaluating what's happening, because that's what I found. But I didn't understand, so I would try different derivatives of the same process, but end up at the same result. So if you're changing indicators, tweaking them, layering indicators over indicators in multiple time frames, you are in a curve fit process. Because the market is random. So you're always chasing a random environment and trying to wrap really fixed structure. The auction kind of comes at it from a different place. It operates in real time based on participant behavior, and that's kind of why I do what I do. And it's only after, and again, it's only what works for me. I'm not saying, but I think if you come to the Trader Lab, if you haven't visited the Trader Lab, you're going to see consistency. You're going to see traders with all different ranges of experience, from newer traders to traders with over 50 years experience that are using a process like this. I will also say that career traders I know use these types of processes and approach the business as a statistical or math-based, data-driven business, not a cowboy experience, not a video game, a business. If you're interested in the business of trading, then I invite you to come to Trader Lab, and you go to bookmap.com, join the Bookmap Discord chat, go to Trader Lab. There's 60 PDFs of these behaviors that you can download and look at them, think about them. Also, there's a primer webinar I did about a year ago on auction market theory, volume profile, the integration of these tools, how to think in market behavior versus indicator behavior, and also mental states and retail trader behavior, things of this stuff, all the pieces that we've experienced. I mean, as a retail trader and no longer being a money manager, when I was trading early on, I started to have the same experiences, early on, sell the mid, put your stop above the mid. Well, if I was doing it, everybody else is doing it, right? Did you do it? Do you do it? Well, if that's the case, can I use that understanding of typical retail trader behavior as an advantage versus behaving like they do? Write that down. Think like a retail trader. Don't act like one, unless you want to. For me, if I understand where stops will pile up, do I want to step in front of those stops, or might I want to use that information as an asset, right? Up to you. Me, I started developing trading systems that would actually trade into the stops early on. So I understood, after getting my stop taken out. And here's the other part of that. Do you guys always sell the mid or always buy the mid? Early on, I thought that's what we were supposed to do. And I'm saying real early on, because that's how I learned in classical bar chart. You learn these things, head and shoulders, the flags, the pennants, all this. So, I learned that, and I did it. And I had my charts that I did by hand, and I get my ruler and my pencil, and I draw the trend line. And then if it kind of went outside the trend line, I'd move it a little bit. Now it fits. Well, that's just all derivations of curve fitting. But I didn't understand that. So over time, I kept getting the same result, and I didn't like the result. And then I started thinking, well, if I'm getting this result, there's others. Maybe I don't do what they do. Maybe I build a system that trades into what they do. Algos operate the same way. They know where the stops are. They know retail trader behavior. You can build algos if you choose to that just take advantage of retail trader behavior. Why shouldn't we think the same way but not act the same way? Just a thought. So this is about the business of trading. Okay. If you're interested, go to bookmap.com. Join the Bookmap Discord chat. You don't have to be a Bookmap subscriber. You won't be solicited. There's a lot of education available. In the Trader Lab, there's those 60 PDFs you can download. and the videos, that you can watch, give you some idea what this is about. And again, these aren't trade recommendations. It's about understanding the market mechanics, how it tends to work, and then it's up to you to start building the pieces. It's really a building process. And in the Trader Lab, what I attempt to do is provide some guidance as far as how to potentially do this. Trading, the thing is, if you can keep the trading part of it simple and then just wait for your vetted setup, which is a process of having a plan, when it shows up, your job is to take the trade. The confidence to take a trade is, number one, accept the outcome as random. Number two, know it has a statistical edge. If you know, let's say there's X, I'm going to make up a number, a 70% or 65% probability that you'll get risk neutral, and that requires trading a minimum of a 2-lot. If you can get risk neutral, and statistically you have better than a 50-50 chance of getting risk neutral versus taking a full stop, does that help you engage when that structure or setup shows up? If you don't know that, you're going to be at a higher level of fear. And don't deny it. It's part of our chemical response to be fearful. I mean, the uncertainty provokes the fear. So if you have a vetted trade plan with statistics, you would open your binder, if you operate that way, to the setup you are waiting for. You will see that when a certain behavior happens, that you might anticipate that setup showing up. And then what is the statistic if you get a trigger of getting risk neutral? It requires a 2-lot minimum configuration. The first contract is to buy the stop on the second one, so you don't have to mess with it. And psychologically, your stomach will stay intact when you're riding the rotations, because it doesn't usually go in one direction. It goes down, it rotates up. If you were short from here and you got risk neutral, what would you be doing? If you got short and it does this, what would you do? Would you be trailing your stop here? What would you be doing? If you got in here and it does this, would you bail out because you only have a 1-lot on, or you're trading it as a 1-lot? What would you do? How about if you were risk neutral, you don't have to move your stop. You can leave it far behind the noise. You see? Right here. Let's just watch this behavior right in here. We'll just watch it. It's not a trade. It's in the middle of nowhere. But let's watch the behavior. Now, here's the thing with these structures. This is a potential triggering structure. It's not a trade. It's behavior. There's your micro high volume. Let's see what the behavior might be. This is nowhere. Understand that. Let's watch. This is about the fractal. This is not a short, it's not a trade recommendation. I just want to show you some potential behavior. Now, if it breaks above here, there's more stops, right? Remember, this here is poorly auctioned. The market has a tendency to come back into poorly auctioned areas and auction them. So this right here created low volume. This breakaway, just like the higher time frame I showed you, was not auctioned. So the market has the potential. Remember the higher time frame, and if you don't remember it or you missed the beginning of the stream, if you're in the Bookmap Discord chat, you can come back and look at it, because you need to take a top-down, bottom-up approach, right? Fractal. So we're trading inside a higher time frame. In the higher time frame, we had an area that was not traded, and I'm assuming this is low volume because I lost my data now that I'm looking at it. So this is a micro high volume structure. Chop, 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 convenience store, 10 o'clock Saturday night. Break low, pull back to high volume. Potential short, but not, unless it's part of your trade plan. And then potential rotation down. All this suggests to me is rotation. That's all it's suggesting. And where is the obstacle? This high volume down here, which is from this. So let's just see what it might do. Don't know. High volume to high volume, potentially. If we squeeze above here, then more shorts get taken out, and then the other swings go. That's kind of how this might work. So we're just observing, guys. Are you guys tracking? Again, this is not a trade recommendation, never is, never will be. This is about structure and auction market theory and how you might read fractals. This is a triggering structure. Now, if it shows up in the middle of nowhere, it's not actionable. You can educate yourself to develop unconscious competence to recognize the potential. And again, like anything, it could do whatever it does. Let's watch it, okay? And in the meantime, I'm going to check the chat and let's see if there's any questions. Limit buys would be support. No, Tyler, buys not necessarily. A limit buy is a passive order. It might become supportive, but they're not the aggressor. They're passive. And a lot of what's in the limit order book is not real. It's algorithmic. They can stuff this book, and it doesn't mean anything, right? So what matters to me is volume. I'm just telling you me. I'm not saying anybody. But the limit order book for me is a piece. It's algorithmic in many ways. The volume, this is what means something to me because I'm tracking the participant behavior, which is what creates the movement. This is algorithmic. You see how this is flashing on both sides? They have no, see this? They're together. This is the same guy. That's algorithmic. And it's like a hand. If this comes up, it puts pressure on the book. That means these the sellers above, the limit sells will pull. So it actually influences the book. But the process, and again, it's a prioritization of inputs. And I'm not saying it's right. I mean, I don't know. I don't know what's right. I do know that for me, and I can talk about me, that's what the stream is about. And I'm not saying what I do is right. I really have no idea. Is the chassis. How do you prioritize inputs? I prioritize this over anything else. I want to see confluence when I see it of other behaviors. It gives me more confidence. And I do talk about order flow. But if I have nothing visible here, it doesn't mean I don't take the trade because my chassis is built on the participant behavior. That's the auction. Then it's the integration of Bookmap order flow tools, how it helps me. I see this sitting here, but so does everybody else. Is this real? It hasn't traded. You don't know what's going to happen here. Are they going to really trade? Are we going to see front running? Probably in front of it if we come down. Are they going to pull? You don't know their intent. That's the whole thing with this. So for me, and it's just one way to do this. And if you guys figure out a better way, which I hope you do, come to the Trader Lab. This is what the Trader Lab is all about. It's not one dimension. We all share and leverage our collective experiences, and that's all I'm doing in the Trader Lab. I'm just one guy. I'm not a vendor. I don't sell anything. There's none of that. Not my interest, not my time. But I do, having gone down this path and seeing so many retail traders not have a chance because they go down, they go on, now you go on the internet, you have so much input and so much information. How do you sort it out? So that's why the Trader Lab exists, just to help you get a handle on something and then attempt to make it your own. Notice where we went. Is this a coincidence? I'm asking you guys. Is this a coincidence? And yes and no. It's random. But what else is it? Behavioral. Now we come back above here, squeezeteria, right? That's all I know. Are you guys following? To use the last price. Well, the last price, I'm looking for the reaction, This was where this price was too high. There are stops sitting here. This auction might be complete. It might have gone down and found its buyers, and it can come back and check. If we take it out, remember what's sitting here, fuel, so we can squeeze. I don't know. When I have something like this, I prefer, first time is the charm, which is this. In other words, this is a triggering structure. Chop, 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 break. It needs to break. There's your trigger. This is the micro high volume test. You see the sellers. All this is a short. Once this is done and we come back, all of this buy stops above here now are potential fuel, which is, so for me, now remember I was saying all along, this is not, anything. But you can study these. And part of the thing with, it's this structure in alignment with a higher time frame structure, you see, which might be up here, subject to your trade plan. If you can trade in this fractal, yeah, you could be trading this. Do you want to operate in a 4.5 point range? As you guys know me, I like the kickback. I'm more like, give me this. This takes a lot of effort. Here's the other part of this. It's not that you can't trade this, but if you can't trade this, then you have no business working on this. This is an advanced process. And here's why. You have to be precise because once the range compresses, my risk to enter here and trade this is the same risk as trading that whole range. Which one do you think makes more sense? I'm just asking. Can I trade this? Yes. Do you want to trade it? I'm going to suggest no. Not until you have this and you are profitable. This is like adding a turbocharger on. And if your FOMO says, I want it now, you're on your way out, not in. You're on your way out of the business. This is something you can look forward to, but it's a whole different game. It's very advanced because look at the speed you have to read. So if you're going to take the same risk on a trade like this and you're playing in this, I want to take that risk here. I got the same risk for this. What pays the bills? Same risk for this, risking a stop and a stop pick right above here. See it? It's very nuanced, this is, and very fast. So you develop the competence in the higher time frame fractals, and then as you go down, your risk doesn't really change. What happens is the compression and the time changes. In other words, much more fast, much quicker, much less room for slop. Does that make sense? But you can see a generic process, right? Is this making sense? Is number two, is that one not working, guys? TB2? No screen, whatever on there. Oh, it's down. You know, let's see if I can fix that. Hard to say. I'm going to try this, guys. All right, sorry guys. I'm having some technical issues. I'm sitting in Costa Rica, and they're not known for being animals. When it at least out here where I'm in a little place on the beach, really in a small town on the coast, on the Pacific coast, and infrastructure is not something that they're okay. Good, we're back up. Now let me make sure YouTube is still floating along. We doing all right, guys? YouTube, you all right? The thing about what I do is I don't really think of these as indicators. Yeah, Karma FX, thanks for being here. Yeah, if you're interested in the resources Bookmap has to offer, if you're interested in the Trader Lab, you go to bookmap.com, join the Bookmap Discord chat, come on over to Trader Lab, take advantage of all the resources. 60 PDFs of these behaviors you can download and look at, ponder them. Think about what you see. Think about why. They're very detailed. And early on, Bookmap asked me to create material, and just post it from time to time because I used to just do this in the chat. Try typing this out, but I did. Tried to, and it was, trading and doing that is a bit of a problem. So it was really rough. So they said, well, what do you think? And I said, okay, I'll try a little streaming. It's not my thing. I'm not a vendor. So anyway, but this is very sensible. The auction is the basis of how the market operates. It doesn't operate based on indicators. The auction is really what the market is all about, is trying to figure out what's this thing worth. I mean, really, that's all this is. If we knew what the price, what the S&P was worth, we'd have one price, it'd be fixed, and we'd all go home. But the market doesn't know what this thing is worth. So what it does is the participants try to figure it out by auctioning. What's too high, what's too low? And they do it in all time frames, you see. What's too high, what's too low? Is this too high? Is this too low? What's fair, what's unfair? I don't know. They don't know. Is this too high? Where's too low? See, low of the day might be too low. Don't know. This is another target down here in a higher time frame. Does it have to get there? Never. We don't know. Yeah. Well, thanks, Karma. It all takes time. Guys, if you want to build a business, let's get real. You got to be committed. You got to invest time. Do you want to be an athlete? You want to compete at the highest level? Because that's what you're attempting to do. You're competing against the best minds on the planet. We're talking PhDs in math, quants, hedge funds, prop firms. I know firms that have physicists on staff that are continually trying to figure out how to get your dollars. Do you want to compete? Well, think about it. Get real. You're going to build a career. You want to be a surgeon? What do you go through to be a surgeon? You want to be a professional athlete? What do you think you go through? You get coached. You watch films. You go out on the court and you practice, practice, practice. You review your performance. You look at what you might do better. You review, you drill, you drill, you drill. Trading is no different. The other thing about trading is it's metric driven. You can drill down into it and start deriving metrics, which will help you manage your emotional state. Don't underestimate the challenge in trading. The trading part of it, we have to manage our fear. It doesn't go away. Early on when I, had FOMO and I would click the mouse and do all kinds of ridiculous things, move my stop to break even when there was no reason to. It was all driven by emotional states. I didn't understand them because nobody had talked about them. It just wasn't out yet early on because nobody was doing what I was doing. I'm telling you, it was like being under a rock. All my friends were floor traders. We'd all go to breakfast, usually after the first hour of trade. Everybody went to Manny's on Jackson in Chicago. That was the place to go for breakfast. If you had to wait online, they give you a little box of Milk Duds, which I thought was pretty cute. And then they had a great omelet there. So we'd all go and we'd all talk. And, they thought this was crazy because, don't forget, they're in a different business. And now the floor traders are gone, but now we have the algos and we have market makers, of course. So everything has changed, right? I'm still doing this. Those guys, most of them could not transition because they needed the noise and the sound in the pit. In order, it was different, So it was a different business. That business is over. Now the business has evolved and changed because of computers, but the processes of price discovery and value have not changed. Peter Stottlemyre came out or shared the market profile, and I learned it from him, and I think it was 1985, and I had already gotten involved in indicators. So, and it really messed me up because I thought I would use my indicators and add the market profile. All I did was add conflict. So I couldn't do anything. I mean, it just made a mess, The stop indicator, I'm getting the question how the stop indicators. Well, Tyler, the odds are not against us. The odds are against retail traders. The thing about odds is probabilities. You're mentioning the term odds. Actually, if you vet a trade plan, the odds can be on your side. If you don't have a trade plan in the statistics, then you're the gambler and the odds are not then you are playing against the odds. It's a very, which is a very insightful statement. You just have to extrapolate what that means. The odds are against you, yes, unless you know the odds. Then you make the odds on your side. And odds is another term for expectancy, probability. So yeah, the odds are against you if you don't know the odds. And chances are, if you don't have a vetted trade plan, the odds are against you, and that's gambling. And over statistically speaking, that's not a winning business model; it's a losing business model. So yes, yes and no. Yes, the odds are against you if you don't have a vetted trade plan. If you have one, then the odds are with you. And of course, your outcome is going to vary on you doing the work. You, I mean, everybody collectively, and also being able to execute. Biggest problem in this thing is actually doing it because of fear. Having the statistics help you manage the fear, because now you can transfer fear from the randomness of the outcome to overhead and cost of production, because you know over a sample size or distribution that you have a net, assuming you can execute the darn thing and follow your rules. That's the job of trading. It's nothing more than that. And then it's a wonderful business. It's a random business, but days like today are the days that make up for the days where it's just, nasty. And there's days it's nasty. And that's just part of business of trading. Every business has interactions, or, let's say you're manufacturing a widget. Some people don't pay you for the widget. Sometimes the machine breaks down. Sometimes you have an expense you didn't expect, right? That's business. So I'm suggesting you change how you think about it. And the only way to get to that, in my opinion, is to understand the business of trading, and that's how potentially you can create a career and have longevity in this business. So it's not a hobby. You can't say I was a trader, and that might be the outcome for many of you, because you got to do the work and be willing to invest the time to become a top performer. That's why this is not a trade calling room. It's a waste of your time if I give you the answer. I'm showing you a process, and then you can piggyback the process and then craft your own. This process that you're seeing works in all markets that have liquidity and, volume. In fact, in the Trader Lab, we have Traders Trading NQ, CL, and others. Most of us focus on ES only because it's got high liquidity and you won't get skidded, and it has adequate rotations, in the current conditions it's in, to make it worthwhile. Notice the high volume. Notice the check. These are triggering structures, not trade recommendations. They're just things you can study. If you understand what makes this happen, then you understand what makes that happen. And you understand how, if this was at a alignment, an aligned location, this would be a short. Now this is in a vacuum, right? That's what we do in the Trader Lab. So the stop indicator, I'm getting, Jay's asking me about the stop iceberg detector. And let me tell you what it is. First of all, this is data that is from the CME, and it's called market by order data. Now think about it. You place an order on the exchange, they got to know, is it a limit order? Is it a stop? Is it a market order? What the heck is this thing, right? So that's where the tag comes from. So this is your sell icebergs. These are buy icebergs. And an iceberg, so they pay to get ahead of you in the queue. I mean, I don't know if you know about it, but not that it's that important, but it's important to know only because more sophisticated players are using the icebergs typically. But don't infer too much from it, because you don't know. What's this guy doing? Is he covering? Where was he short? Is he short from here, going for 3 ticks? What's he doing, right? You don't know. So we don't know. But here's how I use the stops. So let's look. Here's how I use it, and I find it very valuable. Let me try to get you a good example here. I'm looking for a good one. You notice what happens here is, as you open up Bookmap, we can get into nanoseconds with Bookmap. And I'm going to tell you, I can't see a nanosecond. I don't know about you. but look at how granular you can get. So, but as you zoom in, it slows it down. Here's an example, and I'm just going to show you something. Market's coming up, 7 stops, exhaustion, right? This is showing me who's the buyer here, and I'm just pulling this out of left field. Only 7 stops, a buy stop. So if we break, and here's the volume right in here, and we come back up to this microstructure, we might rotate off it. That's all this is what it's showing me. What it helps me see is exhaustion, and it has to be in alignment with the location. That's why I look for this. Now, I don't know. I mean, this is not a setup. This is just maybe, right? But I'm showing you how I use it. So up in here, break, high volume, pullback to high volume, potential short. Here, high volume, pull back to high volume, pull back to high volume, pull back to high volume, potential short. And all I'm showing you is behavior and rotations. I'm not showing you trades, right? I'm showing you how I can read the market. With practice, and this is why I always say narrate, narrate, narrate. If this, then that. If not, then what? If it exhausts and it breaks and pulls back here, there's your trigger, and it's too high, this auction, then what? If this, and it doesn't take this out, then what? Then that. If I pull back to this high volume and it doesn't take it out, then what? Then that. If I pull back to the volume, watch, the volume, then what? Then that. What do you think, guys? Now, not a setup, behavior. This is where these are called triggers. And in the Trader Lab, we discuss triggering structures. So how do you do this? Well, where are we in the higher time frame? South of the border. Where are we currently? Potential rotational trade, I don't know. Outside in, from wherever. Where's your setup? I don't even know. I'm not looking. High volume is here. Outside in. Potentially outside in. No longs, only shorts. So outside in. Outside in. This is called mean reversion. If there's not enough range, you got no trade because this is your obstacle. This is like coming back to your VPOC. Now let me take you into, I'm taking you now into the microstructure. If this is the high volume in here, this is the high volume in here. So this is the same as that. So microstructure in to the outside. So mean reversion in alignment with the higher trending time frame. Is that logical? Yeah, Jay, yes, but again, Dominic Australia? Oh. I'm sorry, I didn't understand. What I'm a little confused here. So what this is the fractal. So if you're in a downtrend, how do you participate? Are you going to sell this thing here? Not so much unless you want to. I mean, if that's part of your plan. Me, I need the counter rotation to get back in alignment. What is the counter rotation in a directional move? It is an outside in trade or mean reversion. It's a context or fractal context inside of a context. And if you go to Trader Lab, you'll kind of see what this is about. Or you go up on YouTube. I've actually posted some streams, previous ones, on trading a trend configuration and mean reversion. It's all the same, guys. So once you understand these kind of market mechanics and participant behavior, you can start isolating them in fractals or microstructures. And for me, I initiate trades in this because I don't like losing. I don't know why you would like it, but you know what I'm saying by that is I want to minimize my risk of discovery of the location. So if I can get my locations and maybe take a 3 point or less risk per contract, I'm good with that. But my range has to justify that risk. That's part of a setup requirement. So you may see these trades, and if they don't fit your trade plan, your job is not to trade it. Your job is to narrate it and create the muscle memory. To operate in a shorter time frame just takes more skill because you can't be hesitating. And when you're learning anything, it's very intentional. It's like playing music. Think if you guys have ever learned a musical instrument or let's say a language. Initially it's memory, but it's a sequential translation in a conscious state, not an unconscious state. For me, once I see this, I know what this is, and then I know what this represents. Same thing here. What does this represent? I'd be risk neutral. If I got taken out, I'd be back on the same trade, but that's me. You might not want to trade like that. You might think I don't want to. Then you don't, right? It's all the same. Watch. It's all the same. High volume, break, pullback, down, high volume, here, break, pullback, 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 south. Are you guys tracking? And Jay, yeah, the smaller amount of stops. Remember what buy stops are. They're buyers, but they're passive buyers. They're not initiator. They're being taken out in a squeeze. So those are weak hands. So if the trend is down, I want to see those guys get taken out, and you can see them getting taken out up in here, and over here. So thanks for playing. We'll send you the parting gift. This is still shorts, right? Is everybody tracking? 39.40. I don't know where it's going. Let me look, by the way. See, I don't predict anything. I used to think that, I can pick the high of the day, the low of the, I don't know any of that. In fact, I don't think about it. I think about the participants because this is the real time representation of what they think. And those are the guys I want to align with, the buyers and the sellers. This is the next target down here. And this is from a higher time frame. It's been sitting here for so long it's got moss on it. This is how I attempt to get in alignment. Now remember, the whole goal of this, at least for me, is just to have structure that gives me something to lean on, and I accept the randomness. The market never has to go here, or it can go through here and not look back. It can do anything, right? Carmen, I don't know. You're saying you don't have permission. I don't know what you're. If you're trying to get on the Trader Lab, they're filled up. There's no room now. The thing to do then is to watch it on YouTube. It's why I have YouTube because we overflow. I cannot. Let me try to post that for you guys in the Discord chat if you're having a problem. I'm going to post the link, and you guys can do that. There. Well, you know, well, if the trend is down, I think the only way to go is south until it changes. So there's no longs. I mean, if this thing turns around, it'd be like turning a tanker around. So for me, and if it did that and I didn't get on it, I wouldn't care. It just doesn't matter to me. What matters is staying in alignment until it changes. It hasn't changed since really the open. So, I mean, the only long would have been a long off the open, which was responsive buying in this context after yesterday, no long. So Well, at least for me. So it was short, 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 short. And remember, the overnight volume point of control seems like a long time ago. That was the location for a test of the ETH retail. Remember, it's the same as this. That ETH volume point of control is this, except it was from that last auction. Now, this is the developing point of control, which has been migrating lower, saying all that above us is too high. In this little microstructure, this is like a volume point of control in here. Too high, too high, too high, test, too high, test, too high, test, south. You see, all fractal. Once you understand how it works, it's just like those nesting dolls, higher time frame, down, 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 down to the same process micro structure for triggers. Once you understand how it speaks and you can translate, then it's the same process over and over. That's why I think of this as a simple approach, really. Um, it just takes time to kind of organize it mentally and recognize it and then vet it. In other words, lay out a plan and you start from the top down. You don't get cute and try to play in here because it won't work. This is a very advanced process and you have to be are you interested in taking the same risk here to go where? Where are you going? 5 points, 6 points, risks 3 on a 2 lot, you're risking 6 to do what? See what I mean? Maybe not your trade. Maybe it shouldn't be your trade. Maybe your trade is to wait for larger rotations and that's your job, or you're done for the day. Would that be terrible if it doesn't fit? I'm just asking. The Propushka dolls, yes. Thanks, Jim. Um, there's PDFs up there. I'm not sure what we're asking about here. The PDFs or Rod, do you know what that's about? Um, there's a question there about what accessing my PDFs in the Trader Lab, the 60 that are available, or is that another topic? Oh, okay. Thanks. Yeah, you guys, if you're in YouTube and you're interested in the Trader Lab and what we do there, this is about creating a career, a business of trading, not fiddling, not playing games. It's a serious group, and we're there to leverage our collective experience and help each other get better. I watch my streams every day because I want to see things, nuances. It's practice. It's deliberate practice. Do you have times built in? In other words, in the business of trading, there's what we do right here, right now, but there's also the review, screenshots, building a catalog of trades. I showed you what Mike Miguel yesterday, what he does. He has everything broken down, setup, statistics, mental state. When I start trading every day, I have a sheet I pull out. I have to put my mind in a different place to trade. I have to remind myself of my weaknesses, things that I've seen over time that are not good, that I do. And because I have to be on guard, it's unconscious. And I'll tell you, one of mine is I get off to a great start in the morning. I tend to start becoming passive. Instead of like when you're in alignment and you have a day like today, you should be doing your thing and just following your plan. What I found, and I didn't even know this, and it was really built on fear of loss, and I had no consciousness of it. What I would do is start backing off, not taking trades because I'd be up so much, you know? And that's the opposite of what you ought to do. Like when you're in the rhythm and you have the rotations and everything is clicking, isn't that the time you just keep doing it, right? I did the opposite. I didn't know it. I didn't know why either. On the opposite of that is if I got behind in the morning when I was not in alignment, or the market and the participants were not, and my plan were not in alignment, which is really what it was, and I start going behind, I actually got more aggressive when I should be more patient. They were opposites. And until I was keeping statistics, I didn't realize it. So I was keeping statistics and I saw some behavior. And I said, well, what is this? Why did you stop trading? And then on the other one, why are you getting more aggressive? This is ridiculous. You should have been more patient and, because things were blowing past structures. Something was weird. So I had to change it. So in the morning, I start my trading. I'd say, okay, mental notes. I got a section on my brain, basically. Here's your wiring. Here's how it interferes. When you get this stimulus, this is what you need to do. I'm just mentioning because we're all the same in this business. You know, I mean, we all have the same issues. It's what you're going to do about it. If you ignore them, you're not learning and you're paying a price. And then the other part of that was, and I suggested this for members of the Trader Lab, and all of this takes effort and commitment. Create something called a error cost calculator. The errors you make, what does that cost you? Moving the stop, not taking the trade. Start putting a number on it. Bailing out, you know, errors. And you need to quantify the errors. Then you put a dollar amount on it and you put down and you see what it is. Then you take a check, you write out that check, and is it $1,000, $2,000, $5,000 a week? Put that up on your monitor. And then once you quantify an error versus just mentally ignoring it, put a dollar value. You want to create motivation? That'll do it. Think about it. Tyler, there's been a lot of talk about, as mentioning about the fractals and the it's all Fibonacci, which is, this natural order. And I did a lot of work with Fibonacci years ago. Elliott wave, Fib extensions, Fib retracements, Fibonacci time cycles. Do you want to talk? We can. Who used to say you want to talk? We can talk. I'd spent tons of, how about years working with different harmonics of Fibonacci. Shall we talk? And all I'm going to say is none of that is part of what I do now, because all of it added in expectations, and expectations are just numbers and lines on a chart. It still doesn't represent the current interaction of the participants in price discovery process. So that's why I have none of it, but I've done it. Just saying. But that doesn't mean you shouldn't do it. See, I'm not going to ever say what somebody shouldn't do. I'm only sharing what I do in my experience, because been there, done that. And it was logical to me because I, quote, believed it. There is natural symmetry. But what does that have to do with the price of the S&P? Just saying. So what I have found is anything you put into the mix, if it has an influence and it adds randomness, I would suggest you jettison it, because now you have to quantify it to measure it. Otherwise, it's just random. So again, just me, strip out all the randomness as much as possible, because this is random. The process needs to be consistent. The fact that there's a number somewhere on a chart, what does that have to do with the price of apples today? This is based on participant behavior. And it doesn't, and by the way, if we get down in here, it can rip through here too. This is also in here too, possible. This, if we get through here, then here, then here. We'll see. Lovely. So, any questions while we're here? I've got about 20 or so minutes left. I'd be happy to answer any questions you have. If you're in YouTube and you find any value in this, if it's helping you, throw a thumb in there. And if you're interested in what we do in the Trader Lab, I invite you to come visit. You don't have to be a Bookmap subscriber. You won't be solicited. And there's a lot of additional education: order flow, stocks, how to operate with stocks, icebergs, market maker behavior, options, much more, algorithmic behavior, and of course order flow to the nth degree. All these are pieces, and you can add them and layer them in to whatever extent you need. Trader Lab is really about building a business of trading, so it's not a trade calling room. The thing about this is, it's not what I do, it's what you can take away from this, and make your own. There are pieces that you might find that I do that you don't apply, or or a conflict. It's all okay. It's not about, there's no right way. There's only a way. And if you approach it like a business, I think you're going to have a much better opportunity to stay in it and remove as much of the randomness as possible so you can codify a process and measure it. That's really what this business is about. It's really all it is. Just like think like a casino, really, and know what your stats are. If you have statistics, you can create confidence and manage your fear. No statistics. It's just gambling, and you'll always be fearful. Uh, I don't know how you can manage it without kind of knowing what you might have and what the odds are, and that's all about the odds. The odds are against retail traders because they don't understand the business of trading. So maybe, and of course, past performance is no guarantee of future results, and I can't say that this will work for anyone. What I can say is if you come to Trader Lab, you'll see traders making progress in that it is having a material impact on their outcomes. And, like everything, your mileage will vary. If you're interested, go to bookmap.com, join the Bookmap Discord chat. Come to Trader Lab. There's 60 PDFs to download, plus all the additional education and a couple webinars and other things, plus all that other education. You don't have to be a Bookmap subscriber. You will not be solicited, and you check it out. Any questions? Right? Are you asking me, why? Are you asking me what I would need to see, or are you asking somebody else there in YouTube to take a trade? RYY, I'm not sure you were asking me, but if you were, go to bookmap.com, join the Trader Lab Discord chat. You're gonna, there's a lot of information on there on trades and setups that we discuss in alignment with the auction, using the process of the auction. And of course, now again, remember we were talking about short, 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 pullback, short. These are not recommendations, but I've been narrating them for you. And again, it has to be aligned with your trade plan. These are not trades unless it's part of your trade plan. Otherwise, this is the last one up here. And then you would manage it, or you'd be out of it, subject to your plan. Or you'd put this back on and get scaled. This comes in, watch. See how the behavior might work here for you. High volume node is here, so that's retail. Up in this consolidation, breaks, pulls back. This comes in, it's a potential short. Or you're just using the microstructure up here. There. See it? See it? It's all there. Short. I was narrating it, but I'm not recommending anything, as you guys know. Can you see it? As far as buy ice, it means nothing to me. Buy, it's not my priority of input. I'm looking for the seller. I'm not looking for the buyer. Now, you can use ice if you want, but you don't know what the intention of ice is. You see, here's the thing. Is this guy covering, or is he going to pull? This is what you don't know about liquidity. It's the order book to me is like a banana peel. You can slip on that thing. See this algorithmic behavior. See how the book is responding? So watch the other side of the trade. If they pull, they might have just been pushing it up to get short. This is what you don't know. This is the layer you want to watch right here. Watch this here on this rotation up. This is a different conversation. And this is not really what I go into in the Trader Lab. You've got Bruce at Bookmap, who's our order flow specialist. But watch the behavior right there. It's not a recommendation. I'm just talking about order flow. I'm not talking about anything more. Right here, So we want to watch behavior in here. Let's watch. Nothing more than watching behavior. This is algorithmic behavior. Algorithmic. You see them coming under? This is like somebody giving you a pinch on the butt. A goose, I think they call it. Let's watch this here, okay? Any questions while we're watching this thing? We're watching for behavior here, and I have no clue, but let's watch. No clue. What you're looking for is right here. Does a seller show up in here? Let's just see. I don't know. This is not, my thing, right? Let's watch. Huh. Osterman. Funny. So the issue here, or the question, is going to be what happens in this area right here. Right here. 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 Watch. Not a recommendation. This is how we all learn together, including me. Why would we be looking at this? We want to see here if this comes back in again in this area and if there's behavior or not. Now this is an auction. This is the outside edge of this auction. So think of this like a consolidation, right? So bing, bing, too high. We broke down, broke away. There's your low volume area. It's this up here. In other words, this is not auction. Remember, low volume areas tend to come up and fiddle in there, re-auction. So this is your outside edge. What's that outside edge? Is a consolidation, stops. So we're looking here and here to see the behavior. For me, the primary chassis, remember, is this, not this. But I want to see behavior now. So I'm looking outside, and if we come back, we can come back here. So let's watch it. But these are not trade recommendations. We're attempting to observe behavior. Trend is down, and remember, how do you potentially get involved in a downtrend? Mean reversion, outside, potentially in. So this would be in. So if, big question, if, and it can do anything, remember, lunchtime in Chicago, fine, let's go to lunch. Market tends to thin out. Algos can do a little better because they can move it into our stops. But we are looking now to see if we can come up to an outside edge. So let's watch. And these are not recommendations because who knows, right? We don't know. What do we know? I don't know. Watch. So we'll watch this. And we got about 10 minutes. In the order book, a little pressure, outside edge. So we're going to watch this structure and potentially or not a trade recommendation. We're trying to find an outside edge, right? This is micro, and this is nothing I suggest anybody do until they really know what the heck is going on. It's easy to get sliced here. Now, if you understand micro, you could have a very tight stop, but you have to be in an unconscious level. And you also have to be in a trade plan that's okay with getting popped for small losses. So let's just see what this thing does. Algorithmic behavior. You want him to disappear. There, he pulled. You see? That's how algos behave. This one, now you want to see this come down. Remember, this is our target. So that means if you got short here, using a shoehorn, not a recommendation. Outside edge, right? We talked about it. This is called mean reversion. This is the mean. So you would want, if you got into this thing, now here's how I think of it. Minimum. And this is just examples. This is not trades, right? If I got short here or here, 40 half, my stop would be here, 42, whatever. 2 points, 2.25. Or if I enter better, you know, see, I have to be quick. The better I can trade, my stop is behind this structure. If I get this rotation, I'm risk neutral. My stop stays here. Now, this could be a target, or let me put it to you this way. If I don't get risk neutral here, I want to get scaled ahead of this because this is mean reversion. Does everybody understand mean reversion? What is mean reversion? Any questions? So let's watch this. So you're scaled and risk neutral. Here you're biting your fingernails. This is the mean of the mean reversion. That's the mean. So your scale will be in front of this. Then you're holding. This is a setup we discussed in the Trader Lab, not a recommendation. Any of you guys in the Trader Lab, does this make sense? Have you seen this before? Right. YouTubers, if you've been following this stream, have you seen this before? This is a mean reversion trade. It's a context inside of a context. So remember, if you follow the stream, you'll see this all the time because it's a way to participate in a trending configuration, which means only shorts today. So no long, unless you, as Dirty Harry says, do you feel lucky? Me, not so much. I just want to stay aligned until it changes, right? And then how do you participate? That's what mean reversion is, outside in trading. So the context is rotations with the downtrend. So the trend is down. I don't think you want to be a buyer today unless you're covering. Again, not a recommendation. If you can be a buyer and it works statistically, by all means, and help me be a buyer then. But this is my trade. This is my location. Remember, outside edge, mean reversion, wherever the heck it was. I think it just moved. Scale and then hold. And we might, so you understand, we might just continue rotating or go lower. Are you guys tracking? Rash, I don't know about that VWAP. I think it's busy elsewhere. We don't have to ever get back to the VWAP. If it did, that's a setup in the Trader Lab. VWAP to VPOC. And you guys in the Trader Lab already know. And the IB low. All these are potential opportunities to get short if we got back there. This is another target down here, 39.10, and this here, 39.20. It never has to get there. It doesn't matter. I just know it's there. And what I do is if the auction creates a level, I know the market has a potential at some point underlined to maybe get back and check it. Because why did we leave it? Why was it too high up above in a higher time frame? Why are we coming back? It's price check in the big aisle. That's how this works. It's all fractal. If you're interested in this, if you're in the Trader Lab, this stream will be available to review. I think it's worth reviewing. Maybe I'll post it up on YouTube, kind of pin it up there for you guys for a while if you want to look at it, maybe over the weekend, and, just maybe not. I've already got examples of these behaviors up there, so I don't know if it, it's worth putting it up again. But if you're in the Trader Lab, you can review this. It's available for 24 hours. Those of you not in the Trader Lab, I invite you to come. I don't do trade calling. And you were going to wonder why. I'm not here to impress you. I'm here to help you. I'm here to help you understand the business of trading. You need to do the work, otherwise it doesn't imprint. The idea is to create an imprint, uh, like learning to dance or music, where it becomes unconscious competence. And you only get that by doing the work. Um, so I find trade calling rooms a complete waste of time because you're not learning how to trade. You're creating a dependency. So I mean, there might be value if you find value in it, then by all means. But I think this is about when the Trader Lab doesn't exist anymore, that you maybe have something. Uh, you know, I've been doing this going on 43 years, and I can tell you, there's a lot of things that come and go, but once you understand something, it's yours. So I'm hoping that for some of you that you can make this business your business and make it into your own. Because what'll happen at some point is once you get the aha, that aha moment, and it starts making sense, and all of a sudden you're navigating and translating and narrating, and you have an understanding of why, then you can take the blinders off, and you'll see the light, and you'll also be able to dance in any time frame that fits, you know your parameters. For example, the short out here, is this your trade? Well, it's my trade. It might not be yours. Well, then yours is, higher up. Still your trade. This is just fractal. It goes down and down and lower, 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 lower into micro, 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 until the range doesn't justify the risk unless you can execute. That comes from that intentional practice. Yeah, Moonwalker saying I did post something. These are available up on YouTube. Um, these types, I mean, trend day configuration, trading reports, mean reversion, different things. These are all posted up there for you guys. And you kind of sit back, you have a cocktail on a weekend, and you watch them. Some of them are 4 hours long. You can speed them up, and get through whatever is not of interest to you. Then stop it, go back, and just go take screenshots. This is what it takes to learn the business. It's really all the work you have to lay out to create a business plan, and that's, in my opinion, the only way to be able to be in the business versus just being a tourist passing through, saying, "Yeah, I was a trader." Can't do that. Well, come to the Trader Lab. I think you might find some different opinions on that. And everybody's mileage varies. There's no, when it comes to this or any business, not everybody succeeds in any business. And the fact that there are some tools available doesn't mean you'll be able to master the mental state, which ultimately is going to be your biggest obstacle, is going to be you. Believe it or not, though we all think it's a setup or an indicator or something, that's not the issue. Ultimately, if you have metrics, that's the solution, I think, to managing the mental state. If you don't have the metrics, you're always going to be flip-flopping because of the chemicals that are released into your brain. You don't have control over that. You do have control over how you can tamp down that response. Hope you got something out of this today. I appreciate you guys visiting the Trader Lab last time. Of course, if you're interested in the Trader Lab, you want to join a community of like-minded traders who are serious. This is a serious endeavor. This is about business. It's, you know, we do have fun occasionally in the Trader Lab, but it's a very serious environment for those who want to be in the business of trading. There's plenty of other chats and vendors where anything goes. That's all fine. That's not what the Trader Lab is about. It's serious. And if you're a successful trader, I invite you to come and contribute to the Trader Lab. I'm looking to get better also. I'm constantly striving to improve. Trading is a journey. It is not a destination. It's a matter of getting better and better and better. And practice, intentional practice, vetting, replays. The business of trading isn't just sitting here. It's everything you do outside of this moment to bring you to this place so you can interact with the market and develop the confidence and accept the randomness of the outcome of any trade and just see it as overhead. It's not about you being smart, being right. And yet we think we're wired for that. It's about you having a plan, following a plan, and accepting the random outcomes, and then looking at a distribution over a large sample size. Don't be the gambler, be the house. Choose which side of the financial table you want to sit on. Thanks for being here. Go to bookmap.com, join the Discord chat if you're interested in the Trader Lab. Find your way to the Trader Lab. Take advantage of all the education Bookmap offers: stocks, options, swing trading, crypto, market maker behavior, order flow, and much more. Thanks again, guys. Appreciate you visiting the Trader Lab today. I'm going to put up our process so you know what's behind all of this. This is what the Trader Lab is about. Auction market theory, how the market works, participant behavior, too high, too low, retail, in all time frames. The volume profile is just price and volume, allows us to see inside the price to know what the participants think about prices. The time frame is the fractal you operate in. It's top down, bottom up. Context, this is one of the more confusing elements. The trend is down today, but we're using counter rotations or mean reversion to participate in it. And then the tip of the spear, order flow. How do you interact at a granular level? This is the process that we use in the Trader Lab, and a lot of tools using Bookmap order flow tools, stops, icebergs, order flow, microstructure. These are the pieces. If you're interested, go to bookmap.com, join the Bookmap Discord chat, come to Trader Lab, and you'll be able to see this in play and other like-minded traders who are doing the same thing. And it's by all of us being in this together, maybe we can be better. Thanks again for visiting the Trader Lab, guys. Look forward to seeing you tomorrow. Trade safe, follow your plan, and manage and mind your risk.